last year, tax filers received nearly $320 billion in refunds. And you may be anxious to get your money back this year, but before you file, there are some important changes to be aware of. Financial professional Tony Drake from Drake & Associates joins us live this morning to talk about what you need to know, plus some helpful tax planning strategies. Tony, good morning.
Good morning, buddy.
So what are the changes here, Tony?
I think, we've all been feeling like this pinch of inflation when we go shopping, but it also is affecting our tax bracket. So the IRS has increased the wages that you can earn in those tax brackets. Now, I want to be clear, the tax rates haven't changed, so don't worry, but the tax brackets have. So if you're making more money, you could stay in the same bracket. If you're close, you might get pushed into it. But for folks that didn't get a raise that were close to one of those thresholds, you might actually be in a lower tax bracket this year, which would be great news. You really want to double check that, work with a great tax professional. I always say, Mike, there's two types of taxes, mandatory and optional. A big part of retirement planning is tax planning. A lot of people don't do that, and you really want to pay as much as as little as you legally have to.
That's good advice right there. Did the standard deduction, that also changed, right?
Yeah, those have also been adjusted for inflation. For a single filer, it's just under $14,000. For married filing jointly, you're at $27,700. About 90% of Americans use that standard deduction. They don't itemize anymore, especially after that last tax cut in 2017. You really want your tax professional to run it both ways. So collect all those items that could be deductible. See if you're better off taking the standard deduction or an itemized return.
So you're for 90%. Is that about right? You probably should take the standard, but you should just check. You should check.
I think for most people, Mike, they just don't have enough deductions to do the itemized. So the standard is going to put you in a better position. There's also some great tax credits, though, that you don't want to forget about. There's an earned income tax credit that's increased to $7,430. If you have kids, you have your child tax credit. It's about $2,000 per kid. There's a dependent care credit. Also a newer electric vehicle credit up to $7,500. Only certain vehicles apply, and there is some phase outs based on income, but you want to make sure you're maximizing those tax credits.
I bet a lot of people think about taxes for a week, 2 weeks in February or March or April if they're really hanging on there, but you should think about a year round. Why is that important?
It really is important. If we think back, Mike, to 2017 Tax Cut and Jobs Act, the tax rates went down. Now, the way that bill was written in January of 2026, unless a new bill is passed, it's automatically going to index back up. So taxes are on sale right now. There's some great strategies you can do to take advantage of that. You might want to look at a Roth 401k option. There's Roth conversions, taking pre-tax dollars, deciding to pay the taxes now at these discounted rates. So it then grows income tax-free, comes out, and passes on to loved ones income tax-free. So there's some great strategies out there, but if you look historically, rates are very, very low right now, and it might be a great time to take advantage of that before they pop back up.
Well, those are some ways to lower our tax burden. Are there other ways?
Yeah, definitely other ways. You want to think about maximizing your contributions. Remember, if you're doing that traditional 401k or IRA, that comes off of your income for the year. If you're a high income earner, it might be a way to push you down into a lower tax bracket. But for most people, Mike, I really do like the Roths. You don't get the deduction now, which hurts a little bit at tax time, but that's going to grow tax-free, come out tax-free. I don't have any retirees that are telling me, boy, I wish I was paying taxes on my income in retirement. That just doesn't happen. So it's a strong position to be in if you can be in a low bracket in retirement.
For sure. All right, Tony, thanks for all the tips and the conversation.
Thank you, buddy.